Good afternoon, class. Welcome to this session of International Business Environment. In our last session, we were discussing regarding international monetary system and different kinds of terms or the concepts that we would be using in international market or foreign exchange market. So now in today's session, we shall see what is a foreign exchange market. Now speaking regarding foreign exchange market, it is a market in which foreign transaction takes place. Now to tell it, it is nothing but it is a market in which foreign currencies is used to buy and sell goods and services. Now, having said that, it is better to quote, in words of H.E. Evans. And he tells that it is that section of economic science which deals with the means and the methods by which a right to wealth in one country's currencies are converted into rights to wealth in of another country's currency. It also involves the investigation of the method by which render such exchange necessary, the forms which such exchange may take, and the ratios or equivalent values at which such exchange are effected. Now, when it has given this particular definition, he is being very specific with or in terms of how does foreign exchange mechanism works out. He tells that foreign exchange market is a place where in which the wealth of one currency is changed into wealth of another currency. And in doing so, he speaks of all the institutions, transaction and mechanism that are to be used for this conversion to happen. Now regarding the definition, I will not repeat it once again. It would be given in your handouts. Okay. Now one more thing regarding foreign exchange market is that definitely it would stand as the largest market because it covers the entire world, and also one more feature is that it is a 24-hour market. Now 24 hours market in the sense that not in the sense that each and every market would be working 24/7, but then because it is situated all over the world, when one market closes, the other would be open. That's how a foreign exchange market is a 24-hour market. And also I have a information which is dated back to 2013. Back then the daily turnover of foreign exchange market per day was USD $2 trillion. Okay, USD is nothing but US dollars. So it was data before 7 years. Now even that might have increased. Okay. Now, what do you mean by foreign exchange? What is foreign exchange? What happens in foreign exchange? Now, foreign exchange is as simple to tell. It is nothing but the possession of a foreign currency through which we use to make payments for those countries from which we buy goods. Or it can also be the possession of other countries' currencies because we have given them something and they have done the payment. Okay? Now, whenever we tell foreign exchange, it need not only be currency, it can also be credit. So, whenever we speak of foreign exchange, it also does cover both money and credit. Not only that, when it is foreign exchange, what other things does it cover? Currency is there, credit are there. Fine. What other things does foreign exchange cover? Yes? I am unable to. Gold. Okay, gold conversion is there, but it does contains rules and regulations also. Okay. Now, when we tell in brief, when we tell in simple words, this is what foreign exchange looks like. But when in practical sense, when we actually change, there are a lot of rules and regulations also involved. And also it does include the methods of payment. Yes? There are a lot of methods of payments, how the transaction could be done. The two basic one we have discussed, that is, it can be in the form of credit or it can be in the form of currency, but there are a lot of method of payments. So, when we speak of foreign exchange, even all these things would be included, not only currency, but methods of payment, the rules and regulations, the institutions that are involved, everything together can make the foreign exchange possible. Now, speaking regarding foreign exchange market, it simply means what? It means buying of foreign currency with the home currency that we have. Yes? That is to tell. Now, if at all I consider myself to be a student who wants to go to America and pursue my higher education, and if I am Indian, my currency would be Indian rupees, or when it comes to foreign exchange market, we tell it as INR. Now, I cannot go and make my fees payment directly in rupees, or for that matter any transaction that I would be doing once after going there, I cannot make in INR. I'll have to have dollars, or when you tell in exchange market, it is USD or US dollars, because we have dollars for many countries. Even Canada has dollars. It would be CAD or Canadian dollars. Okay. So, now what I have to do is, to what extent I need dollars, to that extent I should give it in Indian rupees. So, when I invest, when I wait to the bank or forex bank, they would be giving me back the US dollar of equivalent amount. So, foreign exchange market, what we do? We buy the currencies of other countries using our currency. And when we sell also, okay, that is one case. And also buying, what I said now is nothing but buying foreign currencies with domestic currency, and there would be selling foreign currency for domestic currency also. That happens when I am an exporter, I would be exporting goods, but then when the payment comes, if at all it is from America, it would be in dollars. So, I will have to sell it so that I can get Indian currency. That is all that is included in foreign exchange market. Now, usually who sells foreign currencies? Exporters would be selling foreign currencies. Why? Because they want it to be in Indian rupees. And importers would be buying foreign currencies because they will have to make payment in other countries' currency. Now, I would like to quote Ellsworth in knowing foreign exchange market. I quote, a foreign exchange market comprises of all those individuals who buy and sell foreign exchange which may be defined as foreign money or any liquid claim on foreign money, unquote. So, here Ellsworth is being specific in terms of foreign exchange money. He tells that foreign exchange includes any money, currencies, or for that matter near and liquid money is also included, which will tell a individual or a country's claim on other countries' currency. And definitely when we speak regarding foreign exchange, it would result in outflow and inflow of capital, especially when we speak about BOP or balance of payment. The foreign exchanges reflect outflow and inflow of currency. Whenever goods are exported, there would be inflow of capital. Whenever there is import, there would be outflow of capital. So, what might be the nature of foreign exchange market then? What might be the nature? So, when we speak regarding the nature of foreign exchange, to be very simple and brief, there can be three different nature. The first one is the decentralized nature of foreign exchange market. Okay? Okay. Now, here when we speak regarding decentralization, it is not the decentralization that we spoke in principle of management. Okay? There what happens? The authority and responsibility would be, segregated or would be given to the next one in the row. But here decentralization means that the participants in the market would be separated from each other. They are not connected to one another, maybe in terms of taking decision. Okay? And usually the transaction takes place through electronic media or your telephone. Earlier it used to be telephonic communication even before the internet came. Once after the invention of internet, everything would be done over internet. Yes, because it is fast and you can connect to anybody anywhere in the world provided they do have the same facility. Now, when we spoke regarding decentralization, decentralization does represent two things, that is fragmentation and transparency. Okay? Now, what might be this fragmentation and transparency? Now, when I tell fragmented, it is in the sense that a lot of transaction can happen at the same time. Okay? It is not that one transaction would be done, only after the completion of that transaction other transaction takes place. Now, because it is decentralized, because there would be a lot of participants. Whenever we tell participants, it could be the financial institutions that are involved, the government, the dealers, the brokers, or the rest of the participants. So, they would not wait for one another to complete the transaction. It would be a continuous, decentralized, and it can happen simultaneously, in the sense it can happen at the same time from any place. Now, one more thing that when we say decentralized, it does implies transparency. Regarding transparency, whether it is transparent or whether it is not. Okay. Now, speaking regarding it, definitely it lacks transparency. But how do you think it lacks transparency or it is opaque in nature? Because yes, we tend to tell foreign exchange market, but then the one nature of this is that there is no any physical market. Yes, whatever the processes, whatever the information would be there, it would be difficult to interact with. Yes, whenever it is information, the best way is face-to-face communication. That we have already discussed. But in foreign exchange market, one, there is no any physical market. The second one is the information would always travel through some kind of medium. Okay, that's how it is a bit opaque in nature or it lacks transparency. And one more thing, we said decentralized, but you'll always have to remember decentralization is not in terms of authority, but in terms of telling that there are no various locations, no much locations. Maybe Bombay Stock Exchange is there, yes, one in India. There are a lot of stock exchanges, yes. Now we will have to know all those things. There are no much marked, but those participants who are most important in the market, they tend to be concentrate in one single place. So, speaking regarding foreign exchange market, now it is a mixture of everything, a little bit from that, little bit from this. Okay. So, that is all regarding nature of foreign exchange market. What you can remember is decentralization, but you will have to know in which way it is decentralized. The next one is it is fragmented, in the sense hundreds and thousands of transaction happens at a single time or simultaneously. Now, it is opaque in nature, telling that there is lack of transparency because the information travels through some kind of media. Okay. The next is function of foreign exchange market, or in the sense what are the work does this particular market do. Now, the foreign exchange market is also being called as forex market. Yes. Now, it is kind of just abbreviation. Foreign exchange market, it is forex market. Okay. Now, speaking regarding what kinds of things would be used, there might be, foreign bill of exchange, electronic transfer, telegraphic transfer, bank draft, letter of credit. All these things would be used in a foreign exchange market, or in other words, these are called as instruments of foreign exchange market. Now, money would be transferred, yes. Money would be converted, yes, but it would be converted using such kind of instruments. Bills of exchange especially comes in export and importing of goods. And even letter of credit is also used in export and imports. Your bank draft, telegraphic transfer are used for both when it is, what we can tell as retail market and wholesale market. Maybe when I gave an example of the student, there would be no much money involved, okay, and there is no any guarantee that it happens in a continuous, maybe continuously for a long term period, but with export and import usually there would be a continuous transfer of funds. Now first function is that it does helps in transferring of purchasing power or clearing function. It simply tells that the main function of foreign exchange market is it converts currency, money from one currency to another currency, transferring of purchase power. Is it that what happens? When I convert Indian rupees into US dollars, earlier I had the power to purchase anything in India. I had Indian rupees. Now that I have converted into American dollars, to what extent I hold American dollars, to that extent I can buy goods from America. That is where there is transferring of purchasing power. And it happens vice versa also. If at all I was holding US dollars, now if I want to buy something in rupees or in India, I will again convert it into Indian rupees so that I will have purchasing power to buy in terms of Indian currency. Now again in all those instruments that we spoke, those are the things which would help in transferring of purchasing power. Could it be letter of credit, bank overdraft, telegraphic transfer, or for that matter even bills of exchange. Now as we spoke regarding telegraphic transfer, now it is one of the thing which using which there can be fastest way of conversion. Now transfer of purchasing power is that, clearing function is what? It comes in your export and import, okay. The next one is credit function. How does foreign exchange market gives credit function? Power of purchasing we know. Credit function in the sense that we spoke regarding this bills of exchange, maybe letter of credit. Now such instruments, they would not be written for a day or two. They would be underwritten for maybe 30 days, 60 days or 90 days. Now up until that part of time, it acts as a credit for those who holds the instrument. Okay. Now if I tell, it might confuse you, but then whenever import and export happens, now consider yourself to be a exporter. You have exported the goods, and to whom you have exported, from that person you might have got a letter of credit stating that you have already shipped the goods and you are liable to get money from that person. Usually what happens is, once after everything is done, you might take the payment. But now there might be a necessary of money for you. So you having letter of credit, you can surrender it to the clearing house and they would be giving you the money. Okay. Now that happens if you are importer also. You might need money and you might issue a letter of credit to your exporter. That is how there would be credit function in the foreign exchange. The next is hedging function. What is hedging? In the previous class, we did speak regarding hedging. Yes? What does hedging mean? Hedging means you are transferring your risk. Yes? Is it so? Is it what happens under hedging? Okay? So under hedging function, what happens is using some of the instruments in the market, the participants in the market can hedge or can cover the risk the market has for them. Now, we did spoke regarding forward markets in our last session. Is there any kind of hedging in that? When they said that no matter to what the price rises or falls, but at the end of the contract, this would be the price in which I would be willing to sell you and you'll have to pay me. Okay. Now, if at all the situation is that the price falls, definitely the one who has entered into the contract, that person has been hedged from the risk. That is how the foreign exchange market, helps in hedging the risk. Now we shall see who are the, now all these things we had already seen, that is future and forward contracts, bid and ask price, market participants, that is hedgers, speculators and arbitrators. Now call and put option I would be sending you in your WhatsApp group or Telegram group so that you see it, understand it. Now if I play just once, you might not be able to understand it because call and put option is entirely different and it comes under your forward contracts. Now we shall see some of the participants in foreign exchange market, or in other words, who are the people who keep the foreign exchange market alive or who are included in foreign exchange market. Now usually this contains two tiers, in the sense two types of people. To be very simple, we can name it as wholesalers and retailers, or wholesale foreign exchange market and retail foreign exchange market. Now the wholesale foreign exchange market can also be termed as interbank markets, and the retail market can also be called as client market. Now, speaking regarding wholesale foreign exchange market or interbank foreign exchange market. Now, usually such kinds would be taken from banks or the financial institutions. Now, when we tell bank, even the non-banking financial institutions are also included. Now, non-banking financial institution in the sense maybe the PF fund. Yes, they do the work of all these things, but they are not a banking institution. Now, whenever we tell non-banking financial institution, the institutions which are not covered under banking regulation but does the work of this finance, all would be included. Maybe the mutual funds, maybe the provident funds, okay, and the rest. Now, usually it is said that it could be any of the institution, banks, or other kinds of financial institution. They usually undertake the transaction on behalf of their clients. But most of the times, those banks would be dealing for their own behalf or for their own account by what is called as proprietary disk, in the sense which represent that they are doing business for themselves. Now, besides banks and non-banking financial institutions, some of the big multinational corporation, hedge funds, pension and provident funds, insurance company, mutual funds, even they do participate in wholesale market. Fine. Why is it helpful for them? What do they earn? Why do they participate? Now, usually insurance, what do they tell? That they are ready to take our risk. Because they take our risk, we'll have to pay them something. Yes? Now, usually you might have seen with the insurance, what happens? We pay a lot of money. That money we are paying for the risk that they are taking. So that if at all anything happens, maybe a vehicle insurance, if at all the vehicle meets with an accident, the damages would be covered by them. But then there are not chances that everybody's vehicle would be damaged, right? Yeah. But then whenever damage happens, they would be giving you the entire amount. Now, for all these things to happen, the company does need some kind of income. Now, to bring income, they would invest in other institutions. They can invest in the institutions which belong to the country, which belong to the other country. Usually when they invest in other countries, that is when foreign exchange would be included in that. Yes, that is how all these things work. The next one is, we shall see regarding foreign exchange dealers and brokers. Now, what is the difference between this dealers and brokers? Who would be this? Now, speaking regarding dealers, usually it would be banks and non-banking financial institution. They would act as dealers. Now, they would have something called as bid and ask price. Now, regarding this, we had seen a clipping, right? Now, the bid is nothing but it is necessary when you buy. Bid tells to the, to what highest price you can buy or sell. What is it? Bid and ask. Bid is to what highest price you can sell. Ask is, or is it vice versa? I myself get confused. Yes. Ask is sell. Yes. Bid is to what highest price you can. See, wait. Don't get confused. Just go back and check it. What is the difference between bid and ask? Now, usually this bid and ask we use for all the three. It could be a spot market, a forward market or a swap contract. Usually when with the bid and ask, what dealers does is they take the opposite position. That is, they see the transaction which would be helpful for that. They would take those opposite position, and we spoke regarding the spread. Okay, spread would be the difference between the two, bid and ask. Using that spread, they would make some kind of profit. Yes. Now regarding bid and ask, when it is bid, it would be the highest price to which you are ready to sell it, if at all you are selling it. Ask price would be the price to which you are ready to buy something, if at all you are a buyer. Now this particular position changes when your position changes. Imagine yourself to be a buyer. What happens? You will have to know. You will be buying when the price is very less. So do not get confused what is bid price and what is ask price. And each of the price changes when you are a different kind of person. Whether you want to buy it or whether you want to sell it. Okay? Now, the next one is brokers. Now, who are these brokers? Now, usually brokers are the ones who help people or whom we call as client. In terms of foreign exchange market, they would be referred as clients. Okay. Now, brokers are the ones who help the clients to get better opportunities or better rate on the currencies traded, because they would know a lot of transaction, having a lot of information. What make is they make available the different quotes that are offered by dealers. That is how they help the clients to make better prices. Usually brokers, what do they do? For the service they give, they do charge some kind of commission. And how does the communication happens? Communication usually happens through internet media or through telephone media. Yes. Now, there are even participants in commercial and investment transaction. Usually, these would be the importers and exporters or international portfolio investors, could be multinational companies, tourists and other people. Now, these facilitate to keep up the commercial transaction or investment transaction. And among those whom we have mentioned, some of them do tend to do commercial transactions. And the next one is, we have spoken regarding speculators and arbitrators. Who are speculators and arbitrators? Now, to tell in brief, both of them, what they do is they seek profit from trading in the foreign exchange market. Yes, that is their main aim, irrespective of the difference of who is a speculator and arbitrage, their aim is to earn profit. How do they do it? Now they operate usually with their own interest, and they they'll not have any kind of obligation to serve the client or to ensure a continuous market. Now arbitrators, speculators, what do? They see the price difference, and because of the price difference they earn the money. Arbitrators, what do? They see the price difference in two different markets, and if there is any kind of price difference, they would buy and sell until it reaches the same position. Or in other words, when the supply and demand meets, they would stop there. Now there is one more under the wholesale foreign market, that is foreign exchange broker. Usually central banks and treasurers before foreign exchange brokers. Now these central bank and treasurers, usually they use the market to take or to spend the country's foreign exchange reserve, and sometimes these treasurers and central banks will do participate in foreign exchange market so that they can have control over the price inflation in the country. Okay, when when we had things like gold standards, we studied how the government influences the price. In the same way, the central banks and treasurers also sometimes act in foreign exchange market. That is, if at all the country has taken a lot of foreign capital in the form of loan. Now the country has to repay it back. That is when the country or its central bank can act as a participant. Central bank usually participate so that it can have influence on the price. Now price of what? Price of the currency, the domestic currency. Okay, to influence that price, they would be trading in foreign exchange market. Now the last one is foreign exchange brokers. Now these foreign exchange brokers are those participants who facilitate trading between people without the client being involved. Now broker, I might have a broker. Now all the transaction of mine, that person would be handling. I will not be having any kind of interference in that. Either I have the profit or I would be bearing the loss. Now in our next class, we shall see regarding retail market and the participants who would be there in retail market. Our next class would be tomorrow from 12 to 1. Now slowly you can start coming to college, those who are wishing, with all the necessary precautions that you will have to take. Wait until I take your attendance.